Here's a detailed summary of Campbell's Soup Company's, CPB, Q4 Fiscal 2025 earnings call transcript, focusing on key financial metrics, management outlook, risks, and important statements from the CEO and CFO. Overall performance and financial highlights. Campbell's Soup Company reported a fourth quarter of fiscal 2025 that was slightly ahead of expectations as they navigated a dynamic operating environment. While in-market consumption for meals and beverages outpaced the category, the snacks business showed sequential improvement in net sales and consumption. The company's 16 leadership brands collectively performed in line with overall category performance. Revenue. Q4 fiscal 2025 reported net sales increased by 1%, including a 7-point positive impact from an additional week in the quarter. Q4 fiscal 2025 organic net sales decreased by 3%. This decline was primarily attributed to the reversal of favorable shipment timing in Q3 for meals and beverages and ongoing pressure in the snacks categories. It also excludes a 3-point negative impact from portfolio optimization, Pop Secret, and Noosa divestitures. Full-year fiscal 2025 net sales grew by 6%, largely driven by the Sovos Brands acquisition. Full-year fiscal 2025 organic net sales decreased by 1%, with a pro forma volume decline of 1% if Sovos Brands had been owned for the full period. Profitability. Q4 fiscal 2025 adjusted EBIT decreased by 2% year-over-year, despite the benefit of the additional week. Q4 fiscal 2025 adjusted EBIT margin down 50 basis points, with a 30 basis point impact from tariffs. Q4 fiscal 2025 adjusted EPS down 2% to 62 cents. The additional week provided 6 cents, partially offset by headwinds from tariffs and divestitures. Full-year fiscal 2025 adjusted EBIT increased by 2%. Full-year fiscal 2025 adjusted EPS decreased by 4% due to increased interest expense. Gross margin. Q4 fiscal 2025 adjusted gross profit margin declined by 90 basis points to 30.5%. This was driven by higher cost inflation, other supply chain costs, including a 30 basis point impact from tariffs, partially offset by supply chain productivity, favorable net pricing, and cost savings initiatives. Management's forecasts for future quarters. Fiscal year 2026 guidance. Campbell's Soup Company provided guidance for fiscal year 2026, acknowledging ongoing consumer intentionality and the dynamic operating environment, particularly the impact of tariffs. Full-year reported net sales expected to be down 2% to flat, inclusive of the impact from divestitures. Full-year organic net sales expected to be down 1% to up 1%. This reflects continued momentum in meals and beverages and stabilization in snacks in the second half of the year, with modest positive net price contribution. Full-year adjusted EBIT expected to decline 9% to 13%. Full-year adjusted EPS expected to be down 12% to 18%, inclusive of divestiture impacts. Key drivers for FY26 guidance. Tariff impact. Approximately 2/3 of the projected adjusted EPS decline at the midpoint is attributable to net tariff impact. The company expects to mitigate about 60% of this impact through various actions. Base business. The remaining 1/3 of the EPS decline is driven by year-over-year changes in the base business, including increased marketing and selling investments, 9% to 10% of net sales, and a normalization of one-time benefits realized in FY25, e.g., incentive compensation. Core inflation expected to be in the low single-digit range, excluding tariffs. Productivity. Intensifying focus with planned initiatives of approximately 5% of cost of products sold. Cost savings. Targeting $70 million in enterprise cost savings in FY26, as part of the increased peak program target of $375 million by the end of FY28. Significant risk factors. Consumer spending behavior. Consumers remain cautious and intentional with their spending, seeking value. This dynamic can impact demand for certain products. Input cost pressures, primarily driven by tariffs, which are expected to be a headwind to earnings in the upcoming fiscal year. Dynamic operating environment, general uncertainties and fluctuations in the market. Competitive promotional intensity, particularly impacting the ready-to-serve soup category. Supply chain costs, including inflation and other supply chain-related expenses. Tariff impact, specific mention of Section 232 steel and aluminum tariffs and global IPA tariffs. Highlights, meals and beverages momentum. In-market consumption continued to outpace the category. Snacks sequential improvement, saw improvements in net sales, in-market consumption, and share performance across key brands. Innovation successes. Recent launches like Kettle brand avocado oil chips, Pacific flavored bone broths, and Pepperidge Farm Milano white chocolate cookies are resonating with consumers. Innovation contributed approximately 3% to net sales in FY25, with expectations for this to increase. Commitment to consumer preferences. Decision to remove FD&C colors from all food and beverages by the second half of FY26. Broth business strength. Continued strong performance with 7% broth consumption growth in Q4. Italian sauce growth. Campbell's Italian sauce portfolio outpaced category growth, driven by Rao's strong performance, returning to high single-digit growth. Rao's is on track to become the $4 billion brand. Milano white chocolate impact. This innovation drove significant growth in the cookies business, lifting overall Pepperidge Farm cookies consumption. Increased cost savings target. Raised the peak program target to $375 million by the end of FY28. Strong cash flow generation. Generated $1.13 billion in operating cash flow in FY25, with a commitment to returning cash to shareholders. Leverage improvement. Net debt to adjusted EBITDA leverage ratio at 3.6 times, down from 3.7x. Lowlights. Overall organic net sales decline. Both in Q4 and for the full year, organic net sales saw declines, impacted by various factors. Adjusted EBIT and EPS declines. Despite some positive drivers, both adjusted EBIT and EPS saw year-over-year declines in Q4 and the full year, respectively. Gross margin pressure, driven by inflation and tariffs. Snacks category headwinds. While showing sequential improvement, the overall snacks business faced challenges. Tariff impact on FY26 outlook. This is a significant headwind for the upcoming fiscal year, contributing a substantial portion of the projected EPS decline. Ready-to-serve soup declines, driven by category headwinds, promotional intensity, and brand discontinuation. Most important statements from the CEO, Mick Beek in Consumer Behavior Insight. Consumers remain cautious and intentional with their spending. They continue to seek value in a variety of ways, such as cooking at home, a behavior that fuels growth in our meals and beverages business. Consumers are also increasingly seeking flavor-forward offerings, premium experiences, and health and wellness benefits. Strategic focus. By leaning into these areas with focus and discipline across our differentiated portfolio, we can create meaningful connections with our consumers and drive outsized growth opportunities. Innovation as a driver. In fiscal 2025, innovation contributed approximately 3% to net sales, and we expect this momentum to increase as we continue investing in our brands and creating food and beverages that meet consumers where they are. Commitment to consumer values. In the second half of fiscal 2026, in line with consumer preferences, Campbell's Soup Company will no longer produce any of our food or beverages with FD&C colors. Confidence in future growth. All in all, we're driving change to deliver growth. I am confident that our focus on day-to-day execution and the actions we are taking to strengthen our foundation will lead to sustainable, profitable growth. Addressing snack stabilization. Generally, I'm a very strong believer in us being able to start to get our snacking portfolio back to sustainable, profitable growth. You're seeing already some of the sequential progress, but we still have some work to do going into fiscal 2026. Hence, we are talking about stabilization throughout the year because I expect that really to manifest itself in the second half. Most important statements from the CFO, Carrie Anderson. Q4 financial performance context. Our fourth quarter performance was slightly ahead of our expectations. Adjusted EPS of 62 cents was lower by 2%, with the additional week contributing 6 cents, partially offset by an approximate 2 cents headwind from tariffs, and an approximate 2 cents impact from divestitures in the quarter. Full-year financial context. For the full year, net sales increased 6%, primarily driven by the contribution of the Sovos Brands acquisition. Adjusted EPS decreased 4%, driven by increased interest expense. Gross margin drivers. Fourth quarter adjusted gross profit margin declined 90 basis points to 30.5%, driven by higher cost inflation and other supply chain costs, inclusive of an approximate 30 basis point impact from tariffs. Fiscal year 2026 guidance summary. Our fiscal 2026 guidance ranges are presented on a comparable basis, excluding the additional week in fiscal 2025. Full-year reported net sales are expected to be down 2% to flat. We expect adjusted EBIT to decline 9% to 13% and adjusted EPS to be down 12% to 18%. Tariff mitigation strategy. We expect to mitigate approximately 60% of this impact in fiscal 2026 through a number of actions, including continued inventory management, supplier collaboration, alternative sourcing opportunities, productivity, and cost savings, and where absolutely necessary, surgical and responsible pricing actions. Increased cost savings target. Today, we are increasing our cost savings target to $375 million by the end of fiscal 2028, a 50% increase over the previous estimate. Tariff impact on segments. When you think about the tariffs, about 60% of those gross tariffs are coming from Section 232 steel and aluminum tariffs, and that's going to really hit M&B. You've also got the IPA tariffs that will also impact Rouse imports as well. The majority of that headwind is going to be sitting in meals and beverages. This summary provides a comprehensive overview of Campbell's Soup Company's Q4 fiscal 2025 earnings call, highlighting the key financial results, future outlook, and strategic priorities discussed by management.